Good afternoon. Welcome to day 4 of the African American History Month series, Remembering the Past and Preparing for the Future. We have a lot to cover today. We're going to talk about getting financially fit. Okay, while we're waiting for our next guest, we have Bobby Gray from the FDIC. So, Bobby, how are you? Are you on mute?
Yes,
Yes.
sorry. Good afternoon, everyone. Thank you for inviting us. I'm Bobby Gray. I work at the Federal Deposit Insurance Corporation in our division of depositor and consumer protection in our community affairs area. And today I just wanted to share that the FDIC has some financial and economic inclusion tools that can help you as you are working with your finances and making sound financial decisions. We have resources available for individuals and families of all ages, as well as small and aspiring business owners. So I look forward to sharing more with you.
Okay, did you have some slides that you wanted to share?
Sure.
Okay, well, just keep going.
Okay. So yes, FDIC has been involved in economic inclusion in its commitment to making sure that there's access to financial resources to all. And one of the things that we do know is that we have our Money Smart, which is our financial education curriculum, which was created in 2001 as a tool to equip consumers with information so that they are aware of their consumer rights. The main mission of the FDIC, as I'm sure you are aware, is ensuring the stability and confidence in the banking system. And so one way that the FDIC is able to do that is to equip consumers with information to help them make sound financial decisions, or perhaps if I'm not sure I know where to go for help to get, I will know where to get help and know my rights as a consumer. So I work out of our Washington, D.C. office, but we have community affairs staff all around the country. So no matter where you are out in the virtual world today, there are others like me working to help you as well. I mentioned that we have resources available for individuals and families of all ages. It's available in multiple languages. We have some new initiatives around getting banked, and the FDIC has been doing new videos. They're very short. For example, one explains why it's safe to get a bank account, and then some tips around doing your comparison shopping. We have online tools to help you do that. We're all living through this pandemic. One of the resources that we have available talks about how do you, when you suffer a financial setback, whether it's like today, I mean, like a natural disaster or one that's just totally unexpected, what are some of the things you can do as you begin to recover? So these were some of the things that I brought today in my slide presentation. So we have resources to help you begin to think through what does it take to recover. There are tips on saving. Maybe I don't think I have enough to save, but I need to look at my expenses and my income. Where is it coming from? Are there things I might be able to do to just get myself in the mindset of saving and, that recovery? Where can I go for help? There's a FDIC explains video on what happens if you suffer a financial shock. I've had a situation personally where I've had more expenses than income. So how do you think through those things? We also have, again, we collaborate with other organizations such as the Consumer Financial Protection Bureau. We've collaborated with them for a product that's targeted older adults and their families to avoid financial exploitation. As we know, scams, we've seen in the news every day, scams are higher. A lot of times our older Americans are targeted. So these are tools that families can use to help identify what are some of those things that can happen. Again, I look forward to sharing. We have a website that has success stories of how we work with other organizations. Our role, one of the things that we do is collaborate with other organizations or students to offer train the trainer. We found that students were interested in peer-to-peer learning, as well as resources for faculty and the communities that you serve. We have an online newsletter with practical topics. One of the most recent articles was Staying Safe Online, teaching youth about money. And you can find me at bgray@fdic.gov. Our website is fdic.gov/moneysmart. And we also have a mailbox, community affairs @fdic.gov, if you have general questions and would like to learn more. So thank you, Angela.
Thank you so much. We now have some information from the Thurgood Marshall College Fund. Good morning.
Good morning.
So we have Shayna Pryor. Can you tell us what you do at TMCF?
Hi, everyone. So my name is Shauna Pryor, and I currently serve as the scholarships manager at the Thurgood Marshall College Fund. So we do have a presentation today just to let you all know a little bit about the scholarships that we are offering for the 2021-22 academic year. So let me go ahead and share my screen. All right. So the 2021-2022 TMCF scholarships. So what we're going to talk about today is just kind of introduce you to our scholarships team. Going to show you a quick video on who we are at TMCF, what our vision is, mission, and strategic pillars, the types of TMCF scholarships that we're offering, and what that application process looks like, who our 47 member schools are, and scholarship eligibilities and requirements. So here is our scholarship team at Thurgood Marshall College Fund. So as you can see, we are a very small but mighty team. We have our Director of Scholarships, Dr. Marla Ash, our Scholarship Coordinator, Ms. Jessica Alcindor, and myself, Shauna Pryor. I'm the Scholarships Manager. So quickly, I want to go ahead and show you a video of who we are for you all to get a better picture of what we do at the Thurgood Marshall College Fund. Oop. So now let me play it. There we go. Okay. So who are we? So our vision is to change the world one leader at a time. And our mission is to ensure student success by promoting educational excellence and preparing the next generation of workforce talent through leadership development. And our strategic pillars are scholarships, which is the heart of our organization, programs, policy, and advocacy. So at TMCF, we offer 3 different types of scholarships. We offer our gap completion scholarships, which is designed to provide funding to close the financial gap for students that have a need. So for example, a graduating senior that's at risk of maybe not obtaining their degree due to outstanding fees will receive first consideration for this scholarship. We also have our access scholarships that cover everything under cost of attendance for all classifications of students, allowing them to obtain their college education. And then we have our programmatic scholarships, which again covers everything under the cost of tuition, but also offers support services that are aimed at strengthening their leadership and professional development skills. So for the 2021-2022 TMCF scholarship timeframe, we open our scholarship applications for the fall, January through March. In our spring scholarship timeline, we usually open them between August and October 2021. And we close these scholarship applications between April and May and October and November. So for fall scholarships, we make our first disbursement to the schools in August through September. And then for spring scholarships, we'll disperse January through February. And then the second disbursements, January through February, and for spring, August through September. We also do a very thorough verification process, which means that we are constantly checking with the student's institution just to make sure that they are staying on track and continuing to meet the scholarship eligibility requirements. So our official website is tmcf.org. So you can go to apply.tmcf.org to create a student profile. Creating a student profile will enable you to see what scholarships you are eligible to apply for. So that's apply.tmcf.org. And a little bit about our member schools. We do have 47 member schools. 42 of those schools are 4-year historically Black colleges. 3 are 4-year predominantly Black institutions. We do have 1 community college and then 1 private historically Black graduate institute. So just to kind of give you a demo of our website, or excuse me, in order to see the scholarships that we offer on our website, you go to tmcf.org, you'll then click on students and alumni, then click on scholarships, and then open scholarships. A little bit about our programs. Our programs support all 47 publicly supported HBCUs. And on occasions, we may have scholarships from 4 non-member schools. Over 1,200 scholarships were awarded for the 2019-2020 academic year, totaling over $5 million annually. On average, students receive about $7,000, and the largest scholarship that we've provided gave a maximum award of $40,000. And then we also offer some much needed emergency funding to cover unforeseen costs, such as the COVID-19 scholarship. But to date, we've received over 23,000 applications annually. So to give you a live demo of our website, can you all see my screen still?
Yeah.
Okay, so you'll go to tmcf.org, click on students and alumni, and then open scholarships. So the great thing about our scholarships is every scholarship that you click on, you'll be able to see the eligibility requirements and what you will need to provide before actually submitting your application. So before you actually apply for the scholarship, just make sure that you have all of the eligibility requirements to make sure that you're able to complete the application, usually within 25 to 30 minutes. So in conclusion, be prepared, know what is expected for each scholarship. As I shared earlier, every scholarship on our website tells you what the eligibility requirements are and what exactly you will need, so that way you can be best prepared to complete the application. You want to create a support team to ensure that you have all required information for the scholarship. So for students who we do ask for transcripts. So you want to make sure that you have contacted your high school or institution to make sure that you do have those on hand prior to completing the application. And then you also want to know the scholarship timeline. Again, all of our scholarships have the open and the close date, so that way you can be best prepared. And that concludes my presentation.
Thank you. Now, I understand that there may be some questions in our chat, so please type them in and we can answer them for you. Where would someone go to? Oh, this is great. Where would someone go to apply for the GAP Completion Scholarship? Excellent question. You would go to TMCF, Thurgood Marshall College Fund, just the initials, .org. Go to Student Alum, Scholarships, Open Scholarships, and you will see all of our scholarships that we have readily available as of today. Now, I will keep in mind, we have an open date and we have a closed date. We have some scholarships that are closing on March 8th, and then we have some scholarships that are closing on March 22nd. March 22nd. I'm going to say that again. These dates are coming up really quick, so I would highly recommend that you come and apply. And as Ms. Pryor has shared, read the outline on what's required, so then you're ready to complete the application once you enter into it.
Can you share some information about some of the scholarships that are coming up in March?
Absolutely. Ms. Pryor, do you want to go back to our website and we can kind of walk you through? While she's doing that, our minimum requirements, and it varies, our minimum requirements for our scholarships is that you need to have a 3.0 or higher GPA. You need to be enrolled full-time at an institution. We do have our member schools, but there are some scholarships that you can be enrolled in any institution. Ms. Pryor, do you mind going to the Sallie Mae? Oh, she's already on the Sallie Mae. Okay, so as we mentioned, right at the top, you have Student Alum. It gives you an overview of every program that we have. And also, yes, this is perfect. Scholarships under Open. You guys see that? Okay. So she's going to, and then if you go down, there's different tiles. And if you run your mouse across, it will kind of give you a little blurb about it, but click it, and then you're able to get more details about it. Okay. You can, yeah, that's perfect. Okay, so you'll have information about Sallie Mae. It'll provide you an overview about TMCF, and that's critical because it will tell you the up to award amount. It will tell you the number of students that we are looking to award for that particular scholarship. For the eligibility, perfect. I love Ms. Pryor. She is so on it. The eligibility requirements, as you can tell, you must be a high school senior, currently academic year 2020-2021. You must plan to attend, be a full-time student for next year. So as you're going into college, you must be enrolled in the following: a 2-year school, a 4-year school, or a vocational or technical, or even a certificate program. So this is one of our unique scholarships that it is open to anyone who is interested in going to any higher education type of school. And then it will tell you if there's certain requirements for residency. It'll tell you the types of students that we're looking for. But this is important, students and parents. If you go to how to apply, This is where we stress it is very important for you to make sure you understand what's needed in order for you to apply. And as you gather all of that information, it also gives you exactly what the questions you need to be prepared. And then the apply now, that's the button that will give you access to it. Okay, what is the best way to set your application apart for the other students? That is an excellent question. The best way is to ensure that you complete it. Make sure that you're always, as a former educator, make sure you're writing that as if it's your final exam. Have other individuals read your essay before you submit it. Practice. We do have some applications where you actually have to record a video of yourself. Practice, practice, practice. And then I think the best thing is, just make sure you're thorough and make sure that you're able to have all of the key information ready to apply. Okay.
Okay, thank you so much. If you guys will stick around, there may be some more questions later, but we have a few more people we have to bring up. All right. I'd like to introduce Denver Lewis. Denver Lewis has a unique background and perspective and brings that to his passion for financial literacy within the Black community. Prior to Robinhood, he was an entertainment and sports journalist who transitioned to content strategy, eventually finding a niche in financial marketing. He's worked in a wide variety of companies such as AOL, MSG, HBO, Morgan Stanley, JP Morgan, Capital One, and Verizon in various consulting and marketing capacities. He now serves as the senior lead content strategist for Robinhood's options products. He has seen the importance of financial education on various levels and strives to bring that understanding to communities that have traditionally been underserved, undereducated, and outright excluded from full economic participation. Good afternoon, Denver. So we have Denver back.
Yes. Thank you so much, Angela. And I
Sure.
apologize for the technical issues.
Good to have you back.
Absolutely. So what I can do now is I can hop into my presentation. I'm trying to share. I can't quite figure it out, but hopefully people can be engaged by what I say, and I can share my presentation afterwards if that works.
Oh yeah, definitely.
Okay. So as Angela introduced me to start things off, I'm Denver Lewis. I'm a content marketing strategist for Robinhood. What that means is that I focus on customers' experiences and pain points and keen on messaging and education. So let me start by saying that I can't teach you financial literacy in the next few minutes, but I can introduce you to some important concepts to help you start or continue your financial journey. As a marketing and content person, part of my job is to figure out how people think, and given my industry, particularly about money. So I want to open with some table setters on understanding a few investing assets on our platform, but also provide some healthy pointers on how you should think about them. I am neither a psychologist nor am I an investment advisor. I'm just someone who has a unique perspective on the financial world and who's here to share what he's seen and what our app can do for you. So with that said, Robinhood was founded in 2013, and we offer investments in different asset classes like stocks, bonds, ETFs, options, and cryptocurrency. We were founded on the foundation of democratizing finance for all, and that's what we've strived to do since our inception. The app is simple, intuitive, and it breaks down a historical barrier to investment. So let's talk about some asset classes, and I'm really going to try my best not to get too verbose into this, but I just want to kind of set the table and then give you sort of a general understanding of then maybe how to get started for someone who may be apprehensive. So when you invest in a stock, you're essentially buying a small piece of ownership in a company. Stocks are a kind of movie stars or investment instruments. They're always in the news and everyone is talking about them. So another feature that we offer are fractional shares. A fractional share is part of a stock. You normally can't buy or sell a fractional share on the stock market, but a brokerage firm can bundle several together to make a full share. sell a percentage to complete your share, or split up full shares to sell fractional shares to new investors. Remember to always be mindful of trading fees and all investments that they carry, because they come with risk. Another asset class is bonds that we offer on our app. A bond is like an IOU that's issued by a company, government, or institution in exchange for cash, and is tradable in financial markets similar to a stock. So that's just another asset class. And then there's crypto. So cryptocurrencies like Bitcoin and Ether are alternative finance. They provide users with the ability to make decentralized peer-to-peer transactions, that is, without relying on payment processing companies or banks. This is possible because cryptocurrencies usually operate on blockchains, which are digital ledgers maintained by global networks of computers. Another asset class, again, is are ETFs. So ETF stands for Exchange Traded Funds, and they're for people who want to invest in multiple companies or securities at the same time. It differs from an individual stock approach and spreads your risk across a swath of companies or sectors. There are different flavors of ETFs that are available. They may vary in their investment focus, which can be a certain industry, ergo automotive or tech, or a certain region even, the European emerging markets or other certain categories. But essentially the idea is that investing in the ETF, it spreads risk across several companies within a certain marketplace. So the last thing, asset class I'd like to sort of discuss, which is my focus, are options. Options were created as a way to help protect large portfolios or stock positions against collapses in the market. They were not created to speculate. It was a simple way of transferring a lot of risk of holding a stock onto someone else without compromising much of that stock's existing profit or upside potential. So a little bit more on that, because there are some, I think, some myths associated with stocks. Perhaps the biggest myth is that options are all just high-risk, short-term vices for adrenaline junkies. While there are very short-term options that can expire in as little as a week, which are more risky, there are also options that expire nearly 3 years, not as risky. So while there's certainly an appeal for short-term day traders, options can also play a nice and long-term to nice and long-term investors looking for a thoughtful way to hedge, which is trader speak that means to protect against market risk, or eventually potentially enhance your returns. So tying all of that together is the concept of diversification. It's an important technique when it comes to investing. Diversification in finance is a method of trying to protect an investment portfolio by reducing exposure to the risks associated with any single asset or group of assets. A diversified portfolio includes different types of investments that typically respond differently to the market. The positive performance of some assets should offset the negative performance of others. A diversified portfolio may contain stocks in companies across a variety of industries and geographies. It may also hold an array of asset classes such as stocks, bonds, cash, and real estate. How you choose to diversify your assets depends on the level of risk you feel comfortable with, your financial goals, and your investing timeline. So I guess the question at this point is, why invest? Fundamentally, investing is about risk and return. While a savings account can offer you a marginal interest rate, investing allows you to pursue a greater return over a long run. How does this work? Well, let's look at the S&P 500 index, for example, an array of stocks that represent some of the largest companies in America. So over the last 30 years, the S&P 500 index saw an annualized return on investment of about 7.5%. In other words, between January 1990 and August 2020, a $1,000 investment tracking the S&P 500 would have grown to about $9,300 before subtracting expenses and taxes. But also, and this is a very important note, remember, past experience is no guarantee of future results, and all investing involves risk. But still, the S&P 500's annual performance has varied dramatically. For instance, the index rose 37.5% over 1995 and fell 37% in 2008. And as many of you will recall, that was the financial crisis. That's just an example of the fluctuations that you might experience. So there's this concept going back through diversification, there's this concept of FOMO that I think we're all encountering these days through the news cycles. I have an acronym I like to call leaving food on the table, and it's just having the temerity to know how and when leave food on the table. It can define your future financial outlook. Bill Gates famously said, "Success is a lousy teacher. It seduces smart people into thinking they can't lose." So with all of that said, one of my final takeaways is that it's one thing to read about financial decision making in textbooks, and it's another to make those decisions firsthand. A rational financial decision to some is often simply about perspective and risk tolerance. Similarly, your formative experiences of the economy right now, they may define how you look at the market for the rest of your lives. Before investing, keep in mind that all investments, they come with potential risks. It's important to do your research first, and I can't stress that enough. Whether you're deciding what to invest in or whether to hire a professional to help, it can also help to understand what your investment goals are and your ability to handle risk is. Personal experience shapes investment strategies. So with all of that said and putting all of that together, if you come back to the Robinhood app, when we talk about democratizing finance for all, we make sure that we make room as far as understanding asset classes. We make sure we make room as far as providing clarity to our customers and providing an amazing experience. And we're only growing as a company. The last several years have been amazing for growth for us, and we've been able to provide so many different avenues for new investors. So I'd say that if you have any lasting interest in the market, I say Robinhood is a really great avenue to really get used to investing, starting slowly. But before you do that, I will return to just understanding what your risk tolerance is and understanding that you don't have to jump into the market. I'm certainly not here to encourage that. It's more so about understanding the potential of what the market can do for you over a long period of time. And that's any questions?
Oh, thank you, Denver. I appreciate that, breaking it down for us who aren't that familiar with all that Robinhood has to offer. Now, I did want to ask for people who are listening, who may not be students, who may be older, and maybe not be that computer savvy. How easy is it for the Robinhood app to use for just the average person?
So I would say it's fairly easy, particularly when compared to other brokerages. We emphasize in our app simplicity and ease of use. We also have a desktop solution if you're not as savvy with the app, but it's fairly intuitive. We try to make things fairly apparent when it comes to how you approach the app. So if you have stocks that you want to look up, you get to your investing page. You look them up, and it's very simple. You can add them, and always with anything with using our app, just recommend you do your research. That's all.
Now, do you have any limits on the amount of funds that people can invest through the Robinhood app?
Do you mean in a particular asset class or
In general?
In general, no, not that I know of.
Okay.
Yeah.
All right, that sounds good. If you'll stick around a little bit, we may have some other questions that come up in the chat.
So I have I think one question from the chat. It's how should students think about investing? So I'd love to just answer that really
Sure.
quickly. Okay. So one thing I would say, particularly for young people, is that it's investing can be tremendously beneficial for you, but I would approach it slowly, and I do your research, because the potential benefit of investing early, it can pay dividends, particularly when you get older in age, if you allow your assets to accumulate. Now that's, I talked about FOMO, it's kind of it goes against our modern idea of people want to jump in and jump out and they want to get on what's hot. I generally, I'm not giving any investing advice, but what I will say is that what Robinhood can do for young investors, it helps clarify and it helps simplify, but it also provides a lower barrier for entry. So, if you come with the right plan, you come with the right strategy, and you leverage, you utilize our app, your potential future returns, there's no telling where they can go as long as you're confident in your strategy. Obviously, there's no predicting what the market can do, but I will say that it's absolutely worthwhile to get knowledgeable and then explore the app. Certainly, you're under no obligation to immediately invest, and you're under no obligation to buy or sell anything. But I'd recommend educate yourself and just get familiar with the stock market, which is essentially what our app provides fundamentally.
I asked about a maximum. I should have also asked the question about, is there a minimum?
No, there is not. You can you can open up an investing account. You can fund your account, and you can get to investing. So with our fractional shares, you can invest in companies at $1 or whatever you decide to, and you will see what that percentage is. So we've that's another addition where we've allowed people to get to get in on companies, but get in based on their risk tolerance. So you don't have to feel obligated to pay $500 for a share. You can invest fractionally, and then if you want to invest in Amazon or any other company or any major company, you have the ability to do that.
I guess I should say, full disclosure, I have the Robinhood app, and also Robinhood is a sponsor for this event. So if, like I said, if you stick around a little bit, we may have some more questions, but we are going to bring in another guest now. We have Martin Miles from Hampton University.
Well, good afternoon, Angela, and to your distinguished panelists here today. So a few I've met, especially from the Thurgood Marshall Fund, who we do have a relationship with. So I just want to say that to you. But thank you for the opportunity to contribute to the discussion here today, which I think is an extremely important one. So my view today is really coming from a school's perspective. I'm gonna be a little bit broader in the beginning, but I'm gonna be then I'm gonna turn more specific to what we do here at Hampton University. But in general, let's be frank. Paying for a college education is a serious investment of both time and financial resources. Parents and students know that you're not alone in facing the daunting prospect of paying for college. While it is true that the more you know how the scholarship programs, specifically the eligibility criteria at those schools of interest work per se, may help increase your child's ability with obtaining either a merit-based or non-need-based scholarship or some combination thereof before the availability of funding runs out for that particular academic year. Know that every school has a budget. And just like some of the remarks earlier spoke about timelines and stuff like that, it is so very, very true from an individual school's perspective. Oh, by the way, I've been here at Hampton for about 15 years. I've successfully managed probably close to about $1.5 billion in federal, state, institutional funds and everything else. So I have a little bit of experience here. Been in the industry close to about 37 years overall. In the private sector, public school, and Hampton here for the last 15 years, just to give the audience a little bit of my background. But parents and students, let me say this to you, because this is very, very important. Please, and even though we're in the pandemic, a lot of things we do here, we also do it, now you can Zoom and virtual and all of that. You need to take advantage of visiting the school of your choice, whether it's virtual or in person. I know 6, 8 months from now, we should be back to some sense of normalcy. But you need to take advantage of those school visits, because that way you can learn a lot more internally about the scholarship programs, whether it's need-based, whether it's merit-based, whether it's specific purpose type scholarships that each institution has to offer. So whether it's high school day, whether it's open house, or some other event, we have additional events than that. It's called Admitted Students Day and things like that. You need to take advantage of those opportunities, because you can speak to people like me, my staff, and other professionals on the campus, whether it's the admissions office, whether it's the department that your son or daughter plans to enroll into, because there are a list and variety of opportunities that exist there post admission. So I just want to post admissions office, but I just want to say that to you. I'm gonna come back to what we do here at Hampton here in a second, but I got to give kudos to the TMCF folk, Dr. Marsha Ash, who I've chatted with several times, as well as Shana as well in the past. Two particular scholarships that I thought that would be relevant to my presentation here today. And I'm not going to go much in detail because they already alluded to it in some way. So I will bring this to your listening audience, the Sallie Mae Fund Bridging the Dream Scholarship Program, which Ms. Pryor did a note that is on their website. I won't go too much into that, but they will provide over $1 million for the next 3 years to help student access and complete secondary, post-secondary, education. They have the eligibility requirements, so I won't go much into that, because she did mention that, as well as Dr. Ash, I believe. So the second one that I thought was, because we have a great partnership with Sallie Mae for many years. I know just about everybody there in management. But the second one that I thought that was very relevant and germane to today's discussion or my presentation, the one that's called Completing the Dream Scholarship. Okay, and that's where, and I know Shana mentioned about the gap funding and so forth. This is an excellent one. So the actual website links are there at TMCF. So please, listening audience, parents, students, whether you are a high school freshman, sophomore, junior, senior, please take a, well, more so junior and seniors, please take a look at that particular website, TMCF, for those particular ones. Sallie Mae Bridging the Dream Scholarship Program, as well as Completing the Dream Scholarship Program. I thought they were excellent, in my opinion. Now, I'm biased. I'm wearing my Hampton University, stuff here. I got to promote Hampton. Thank you, Angela, for allowing me to do that. But here at Hampton University, my Office of Admission, we award merit scholarships in the denominations of $5,000, $7,500, $10,000, $15,000, $20,000, and $25,000. And all of them are renewable up to 4 years, as an undergraduate. Now, as Ms. Pryor mentioned earlier, all scholarship comes with criteria, especially renewable criteria. Here at Hampton, you have to have a 3.3. If you maintain that 3.3, that $25,000 scholarship, multiply that times 4, multiply the 20 times 4, and so on and so forth. That's what we do here. In addition to that, we also award room scholarships as well for 4 years. Some students have both, a combination of room scholarship as well as a merit-based scholarship, to help them, pay for college. But again, you have to make sure you read the fine print. Also, in addition to that, Hampton University is in a very, very advantageous position when it comes to money in general, in helping their students pay for college. Why? Because to me, it's very important that we try to help our students, whether you're from a first generation household, a legacy student, to try to award them with as much scholarship monies, grants, and things like that to help reduce their dependency on parent and student loans and parent loans. And so, because we all know about the 1.2 trillion, 1.3 trillion, all that sort of thing, and that's true. But we try to first help their students to avoid, to the extent possible. It doesn't fit every situation. I'm not going to be that naive and say that, but for the most part, we do offer our student population so much monies in terms of institutional monies. Last year here at Hampton, we awarded well over $31 million in institutional aid. I'm not talking about federal, I'm not talking about private sector, but in institutional aid. And that does help our students, you know, in terms of student success, matriculation, retention, and even more importantly, graduation. So, but I say all this because every school is not the same in terms of what financial opportunities beyond federal and in some cases state funding that they may have. So you have to, parents and students, you have to do your research and you have to spend as much time researching these opportunities as you would, as the gentleman talked about with Robinhood and so forth, investing and so forth. And so, because this is one of the most serious investments that you ever make, especially attending a private institution. So you have to take the time. You should not wait until your son or daughter is in their senior year before you start exploring these things. I don't want to talk about 529 college savings plans and all the other things you can do 15, 16 years prior to this point. But again, there's so much you can find out about each school's you know, financial opportunities, scholarship opportunities, if you take the time to invest in terms of going to those individual schools, speaking to the financial aid office, speaking to the admissions office, speaking to whichever school or department that your son or daughter may enroll in. I haven't even touched the surface about STEM grants and things like that, which we have a lot of money that we get from, it's called grants and sponsorship research programs. Now, again, it is not for, you know, you have to be in this, you know, in those respective fields, no doubt, or majors, no doubt about it. And you have to be, you know, above average student. So let me be very frank and clear. That's what scholarships is all about. They're about, most scholarships that I'm aware of are competitively based. So always keep that in mind. Also keep in mind that you're not the only one out there looking for scholarship opportunity. There are millions and millions of students. Salome puts out a very good report, How America Pays for College. And so you can just go to Salome website, www.salome.com, that sort of thing. You'll find all the information I'm talking about there. But what I'm saying is you're not alone. There's so many other people who are doing and looking for the same thing. But if you take the time, invest the time, look for scholarship opportunities. For example, on my website, we have you know, a myriad of scholarship opportunities, external scholarship opportunities that we promote to our students. We also have a Twitter account. We organize all of our external scholarship opportunities in terms of academic major, in terms of the sunset date on the scholarship, in terms of the award amount. So again, you have to take the time to invest in terms of learning as much as you can about that institution in terms of what financial opportunities, post-federal monies that you can get to help your son or daughter, you know, pay for college. And so it's a win-win for them, less loan dependency, less money out of pocket. And schools, we like that sort of thing because, you know, it impacts your default rate and all that sort of thing, your cohort default rate and stuff like that. So I'm not going to get too school specific about things like that, but I just wanted to share some of that information with you. But not all schools are the same. Do your homework, do your research, visit, read the website. You have to do that. You can read enrollment brochures, you can do all of that, and that's well and wonderful. But my thing is, please visit the school of your choice and please ask as many questions as you can. And then hopefully you'll make the right decision. Thank you.
Thank you so much, Mr. Miles. That's some great information that I know families need to make sure their students can get their college paid for. And I know I always tell students, if you have the grades to get into a school, you can find the money. The funds are there. Am I wrong?
No, you're not wrong. Trust me.
Also, we list scholarships on our website, the hbcuadvocate.com. We have about 50 scholarships listed there. And then TMCF is also a great resource. And if you could stick around, I don't know how much time you have, but we may have some other questions in the chat. And so we'll get back to that in a few minutes.
Thank you.
Thank you. Up next, we have Gary McCants from McCants Media.
How you doing, Angela?
Hey, I'm well.
Good. Tell me how much time I got so I can give you the short version.
Oh, okay. Oh, well, a few minutes. Yeah.
Okay. All right. Let me first say thanks for inviting me, and thanks to the other panel guests as well for sharing the information. I got to give a shout out to Virginia Union. So everybody's been tagging their schools. So Virginia Union is mine. So I hope the Thurgood Marshall Foundation hears that as well.
Aggie Pride.
I'm in Greensboro, so that I got to hear that every day.
All right.
Yeah. I'm here to talk a little bit about the Black Wall Street and give you sort of a backdrop of Black Wall Street and really communities all across the United States during the period after the abolishment of slavery. You know, Black people, just like anybody else, were seeking independence, and they wanted economic independence. So if you went to towns like Durham or Tulsa, the Greenwood District, or Wilmington, North Carolina, or Rosewood in Florida, or even places in New York, they wanted their own sort of ecosystem, as we say it today, an own kind of economy that they were very socially conscious about what it took to have a holistic community and to really build a standard of living and a quality of life for Black people. I don't think anybody wanted to go back to the plantations, you know, and go back to the style of life that we were living under. But in every case during that time across America, either Jim Crowism or insurrections like in Wilmington, 1898, you know, white people burning down entire communities and the entire economic process or progress of Black people happened all across the country. I mean, you got Greenwood in Tulsa that was burned to the ground. You know, airplanes dropping bombs, things of that nature. Over 35 blocks of what you call Black economic progress. And these kind of things still happen somewhat today. I mean, you know, you can't get too far away from history and what's happening in 2021 with riots and destruction and racism and economic exclusion. So these are the kind of things we continue to deal with. And we've got to find some common denominator that says we have to have an economically, socially conscious community that can prepare our people for a great quality of life. We're used to doing that. We're independent. We believe in self-preservation, and too many times throughout the political process, like in Wilmington, North Carolina, in 1898, where Black Republicans control many elected seats, whether it's council or magistrate seats, so on and so forth. And the whole attitude behind white supremacy decided to have an insurrection like you saw in Washington, D.C. not too long ago. Same exact thing, this attitude about white supremacy and nobody else can have anything that we can be independent of and own our own businesses and create our own communities is just crazy. And so we have to deal with that continuously. And so education is important, as your guest talked about. Capital is important, as your guest talked about. We've got to have investments in all of these communities in order to grow them. You got to have the money. Now, how much money you want or how much money you need, those are things that you have to devise plans and strategies and so on and so forth. But the bottom line is, historically, we have faced those challenges. And so we can do whatever we want to do, but you can't have a system where you're paying in taxes every day and you're getting less than 2 and 3% of the money that you're investing. That's sharecropping. I mean, it's just absolutely ridiculous. I don't even support that at all. And I'm going to be an advocate against that. And so we've got to have that kind of conversation when it comes to creating these kind of ecosystems across America, this country, in Black communities, particularly in Greensboro. We have East Greensboro, 80% of the population is Black. And so you got less dollars being invested in communities where you have 2 Black council people or persons, and we can't get the kind of investments because of these racist practice and discriminatory practices. It's just unacceptable. And so we've got to do something to close the gap, close ranks, and really begin to talk about how we as a people can continue to create strategies and solutions and mobilize our resources, all these organizations out here and HBCUs, in order to build our community. So that's, in a nutshell, that's what we're talking about.
All right. Thank you so much for that information. Yeah, we know how important it is to pool our resources through, there was a credit union in Virginia, in the Hampton Roads area. Do you remember that NCP credit union?
Yes. Quick story. I moved to Hampton Roads back in I can't remember, 1989. I can't remember what it was. But the reason why I moved to Hampton Roads, because there were several companies that were Black owned. SMA was one, if you remember that one, downtown Norfolk. The bank was Black owned. And you had Bishop Willis that had like 20 radio stations across the country. And I said, man, I gotta be a part of that. That's the movement I want to be a part of. And so that's the reason why I moved to that area.
So there was more going on there than in Richmond? Because I know
Oh my
you.
God. I went to school in Richmond. Obviously, Richmond had a lot of resources and obviously a lot of history of Black owned businesses. But Hampton Roads, when I saw that big tall building with SMA on it, Herman Valentine was the CEO. I said, man, look, you got me so. I'm getting out of North Carolina, wherever I was at that time, and I moved to Hampton Roads. And we had a thriving community there. You had people in the restaurant business, Gil Bland and some of those folks. They had, the largest Burger King owner in the country with Dave Winfield, and you had some other, other businesses there that was thriving, newspapers, so on and so forth. So we can do that anytime, but we got to also have people in elected positions that we elect that support our issues, that would make policy and invest money in these communities and in these businesses. Got to be done. FDIC, I want to say their name, and maybe they can get with some of these financial folk and say, look, we need money. We love the education, but send us some dollars.
That is so true. But I think, yeah, it starts with education though, right?
Yeah, you got to have some knowledge, yes.
Right. Okay, I'll have to check and see if we have any questions in the chat. In the meantime, did anybody have any final thoughts? Because it's 1:05 right now, so we got to be wrapping it up.
So I'll just really share that one of the things that I neglected to say is I've worked at FDIC for over 30 years. I would like to say to those of you joining us today, it's a great place to work. So also please check out our career opportunities as well as the economic inclusion resources that we have. I'm putting our contact information in the chat. I apologize, my video didn't upload, but just grateful to be here today. Thank you.
Okay, yeah, we do have a couple of questions. What advice would you give to someone who wants to invest but may not have access to large amounts of funds? And I think Robinhood is a good solution for that, and I think he may have addressed that. Did anybody else want to address that, Gary?
Get a Robinhood app. I have the same thing on my phone as well. And you know, buy low, any kind of stock, whatever company you're interested in. If you want to buy stock, just do your research, do your homework. You know, buy stock at a low price, and hopefully it'll grow and you'll accumulate some assets from it. But also invest in your own communities that will help as well, other than investing just in the stock market and mutual funds and so on and so forth. Buy property, invest in Black-owned businesses in your community, so on and so forth. So there's a number of things you can do.
Someone else asked the question, are there scholarships for people over 60?
Well, let me just speak to that from a school's perspective. Now, out of the, and I didn't mention this, but we have hundreds of endowed scholarship opportunities here at Hampton, and we have non-endowed scholarship opportunities, you know, as well. But in all of that, I have never, ever, in all my years of experience of dealing with scholarship monies and everything else type money, where there was an age limit. So it's not based on age, it's based on GPAs and other factors, you know, where you're from, and your major, and things like that. So I have yet to see one in all of my experience. And I just want to also say, Angela, too, I can't speak for every HBCU, but I can speak for Hampton University very well. Although the vast majority of scholarship monies are offered through the Office of Admission, no doubt about it, because it's used for marketing and all that kind of good stuff. Not to get into that. I know time is fleeting here. But because we have so much more post admission, I just want to encourage any student, if you don't have the right criteria to get one of those denominations of scholarships that I mentioned, but there are other opportunities post admission. So don't just sell yourself short. Don't stop looking. Don't stop researching, because, and that's why I try to stress to no end for students to visit the school and to ask, and parents, and ask as many questions, you know, as possible, just to, you know, because the more you know, the more you know. And if you don't ask questions, then you won't know as much as those persons who do ask more questions. So I just want to stress that.
Thank you so much. There was another question. When are students notified of TMCF scholarship decisions?
Yeah, so that's a great question. So students are notified of our scholarship decisions by July.
All right. That was a very straightforward answer. Okay.
Here at the university, Angela, for our incoming freshman class, we always notify our students in early December, prior to the year that they start. So for example, December 20th for students who will be enrolled in fall 2021. So yeah, it's always early, because parents and students, they need to know how to pay for college. So the more they know, the more information they get up front, long before they enroll, the student actually attends, it's a win-win for them. And just last night, we had a town hall meeting for our student population. And one of the things that we mentioned was that, I was the one that presented it, was a virtual town hall meeting, that for our continuing students here at Hampton, we will offer them, for those who qualify, and as always for those who qualify, a $5,000 scholarship if they meet the criteria that we will accept. For continuing students who who did not receive a merit scholarship as an entering freshman. So again, you have to ask questions and you have to, do your homework and research, as all the panelists, have indicated here today. So anyway, I know that's an extra plug for Hampton, but I'm coming from a school perspective.
Oh, that's fine. That's just fine.
All right.
Yeah, we really have to wrap this up because it's 10 after, and I know you guys have more things to do, and also the people watching may. But there's one more question, and it's, I'm graduating this year. How much of your income should you invest in stocks if you're in your first job? Oh, yeah. So the person from Robin
I
Hood
would
is
say,
here, but
is Robin Hood on?
yes, yes.
If,
So
if, if
I,
Robin, if he's
I
not on,
only,
I would say 5 to 10%.
yeah,
Yeah, that is the conventional wisdom for, for young people.
right.
As we all know, the stock market kind of turned yesterday because, it dipped into the bond market in fear of interest rates. But if you're that age, you can afford to be more, take more risks than someone my age, per se. So yeah, I think what the gentleman said, Jerry, that's good advice. But always diversify. They can spend a little bit more in stocks than in bonds and that sort of thing. But always diversify. That's a general rule of thumb. Jerry, if I misspoke there, please let me know because I'm outside my lane a little bit, but I do have investments and things like that as well.
No, you're not out of your lane. And there are Black financial advisors as well that you can talk with right in your community and talk about some of these issues. That's critically important.
Definitely getting some professional advice couldn't help, but couldn't hurt. It couldn't hurt. But also, they say never invest more than what you can afford to lose, right? And when we talk about 10%, are we talking about 10%, 5 to 10% of your income or 5% of your disposable income? Because, when you get out, you may have some student loans, so everybody's
I
disposable.
think you answered the question. It would be your disposable income.
Right. So everybody's disposable income is a little different.
I defer to Jerry on that one.
Hey, Miles, listen, when you do a budget, one thing I can tell you, I'm older than 60, so I can tell you what not to do.
Same here. Same here.
Put together a budget.
All right.
All right. Sounds good. Thanks so much, everybody, for joining. And you can probably view this on our YouTube channel pretty soon.
Okay.
So, all right. And
Thank you, Angela.
and thank
you again, Dr. Ash.
No problem. Thank you, Mr. Miles, for the
All
show.
right, man. We'll talk tomorrow.
thank Robin Hood for
All
sponsoring.
right, Jada.
Thank
Okay.
you.
Take care, everybody.
Thank
All
you.
right.
Bye.
Goodbye now.
Bye.